Morning, market chameleons. This morning, D, I made my way down to the local Gamestop where reportedly the employee has invested all his money in his company stock and is reportedly a billionaire overnight when it hit $400 a share.
Oh, believe that? Very nice. Very
Just
nice.
kidding. I'm in my barn as usual. Very cold today, so I as well am wearing a hoodie, D. It is freezing in my barn. How you doing, buddy?
Yep, pretty good. Pretty good. But since you have it up, maybe we'll take a look at that GameStop and see kind of what things are going on that are interesting, maybe to point out. I think it's, what is it, up another, like, I don't even know today, but we'll
it's all over the place. And I know it's been mentioned in the local Jake's Discord group with that has a lot of chameleons. It's all over Wall Street Bets. It's on CNBC. I mean, they're talking about it everywhere. And so it's pretty interesting. But before we get going, why don't we do look at the disclaimer?
Yep. Let me just really quickly. 1 second.
You got a GameStop bid out there, D? What's going on? Chameleons want to know.
No, I have another computer here that I brought up that I wanted to just reference something. But you got the disclaimer?
Disclaimer's ready to go.
Okay, so good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers, and we're not telling you what to do. We're just sharing ideas. If you need professional help, contact your broker. That's what they're there for, to help answer your questions and provide you with guidance. So with that, let's get started. I'm going to share my
I'll tell you
screen.
what's been happening in GameStop and the cryptos and the SPACs. I may have to go search out some professional help, D. I may be on your couch soon.
Yeah, a lot of people need to call their broker for professional help, and not the investing kind, the other type.
Yeah.
But here it is, the GameStop up 45.9% in pre-market hours. So we'll take a look at that one more time just to see like what's going on in the stock and the options, and you know, and I think that there are some other stocks that are in a similar situation where a lot of people are coming in there, and there's so much force behind the buying, and there's a lack of ability to short the stock that is just like accelerating up to the, because look at this volatility almost daily, and it's not sustainable, right? Can't have that type of volatility forever. Before we do that, let me look at the higher market cap stocks, and then I'll come back to this stock. So here, this is the pre-market report. These are stocks trading in the pre-market hours. We have the most active stock, the biggest percentage gainers, biggest percentage decliners. I'm going to take a quick look for stocks over 20 billion. So these are the higher market cap stocks. Five made the percentage gainers list, 128 on the percentage decliners list. So at least from that perspective, it looks like a bearish opening in the morning. I'm going to take a look. Here's Microsoft. So they reported earnings. They're up 1.8%. Let's just click on that, see its historical behavior after reporting earnings. So here's Microsoft, closed at 230, 233, trading 236.75 in the pre-market. That's up 1.9%. I'm not going to get into right now the report itself. We might take a look at that though if we have time. But let's see what it usually does after reporting earnings. So this is its earnings history, and we're looking at the last 12 quarters. So here we see that coming into earnings, this is leading up to the earnings. It's kind of a mixed bag. The best performance it had historically was just the day before earnings. So that was up 73% of the time. After reporting earnings, we see here, this here are the opening gaps. So it tended to gap up in the morning more often than down. So 73% of the time it gapped higher, 27% of the time lower, average gain 1.6%. The average move up or down in the morning, 2.9%. In other words, if we converted all these to positive numbers just to see what the magnitude of the gap was on average. That's 2.9% with a high of 4.1%, low 1.4. After the opening, this is what it tended to do. From the open to the high of the day, on average, again, 0.8%. From the open to the low of the day, on average, it was 1.8% decline. So from that perspective, looks like more bias to the downside than upside. From the open to the close of the day, it closed lower more frequently than higher. 73% of the time, it drifted lower from the opening to the close, 27% higher for an average loss of 0.9%. So it looks like most of that gain was usually done at the open. After that, it tended to weaken. Coming out of there, we see the next day it was like 50-50, a little bit weaker, but leading about 2 weeks, after reporting earnings and after that close, 2 weeks later, 91% of the time, it drifted higher for an average gain of 2.8%. Again, this is from its price distribution history after reporting earnings, and Microsoft didn't get into the details of that report. And I do want to get to that because we're releasing more fundamental data. So before we do that, I want to kind of get into the habit of looking at those press releases and what they're saying. And I'm going to try to come back to Microsoft today. But before we do that, I'm going to unfilter this report. And we see that GME right here, Gamestop, up 56%, trading $232. And what was this stock like? $8 or something, like not too long ago. Well, 5.7.
I think it could have been. I think it could have been lower. I think it could have been. My guess is somewhere between $2 and $3.
Yeah. So I'm hovering over the alerts right now. GameStop price target raised to $10 at Bank of America, right? They're trading at $232 right now. So they raised it to $10. I'm going to go to GameStop GME and just point a few things out that are interesting. Now, we see here $234. I'm going to just take a look at our fundamentals, implied value. And here we think, based on historical valuations, it's about $9.42. In other words, it doesn't really have a PE. So we look at the price to sales, and like here, you see price to sales are way up. If it reverts to its historical price to sales, which was this 3-year average, looking at $8.81. If it reverts to its historical price to sales relative to SPYs, it's about $10.03. So this is, so you could see way above like any valuation we've seen in history. Here's another. Let me come back to that. We talked about shorts. A lot of people are like, well, there's short squeezes going on, and it's really, this stock is very hard. You can't short the stock right now, or almost impossible to short. And here's some indicators here that letting us know that there are 2 indicators we talked about yesterday. One was the threshold list. Right now, the threshold list, this gets updated every day. And the threshold list is basically for regulation purposes. And when we talked about selling short a stock, by regulation, if you sell before you sell a stock short, you need to borrow that stock. You can't just sell it short. Then you need to have the stock to sell. In other words, you have to go borrow the stock from somebody who owns it, with the promise of giving him that stock back when he needs it. You borrow that stock, sell it on the market. You're shorted because now you're obligated at some point to buy it back. And if that person needs that stock, you have to buy it back unless you could find somebody else to borrow it from. And we call that, by regulation, a locate. In other words, you have to tell the regulator, well, you sold the stock short. You have to prove to us you borrowed it from somebody. Where's your locate? Tell us who you borrowed it from. It could be somebody, your broker, somebody else is holding your broker, borrowed it from a different broker. Now, when you can't locate and you fail to deliver it, you get it on this threshold list. And we talked about a little bit about this threshold list yesterday. I'll just come do it one more time. And this is what happens when your clearing firm, right, fails for 5 consecutive settlement days, right, to locate the stock, and it's 10,000 shares or more. So, whatever clearing firm it is, it could be JP Morgan, Bank of whatever it is, they fail, or it's 0.5% of the total outstanding shares. They don't have it. They get on this threshold list, and if they're failing, they have to buy that stock back. In other words, you have no choice. It doesn't matter if you're making money or losing money on it. They're going to buy that stock and then they're going to tell you bought that stock back. We can't locate it. So let's go back to that list. So here's GME. We see that's on top of that list. So you see here, it's been on that list, failed to deliver for 33 consecutive days, or every day for last month, right? And this is indicating to us that when you not only can't you short it, but it kind of disrupts the price discovery mechanism too, because even if a stock's overvalued and zealous, people with their models who think it's overvalued don't have the ability to short it, right? So that also, you don't have that kind of ceiling from short sellers who think like, well, it's getting out of control. I'm willing to take that risk and sell it short here. They don't have that ability. So that's one thing here. What we see, it's right up top right now on our threshold list. The other thing is we could take a look at the Gamestop, and the options markets can tell us as well. So when something's difficult to short, if I can't borrow the stock, and somebody might be willing to let me borrow their long stock, but they want a higher fee, right? Not for free. They're like, okay, you want to borrow the stock, I'm going to charge you money for it, charge you a fee, charge you interest, whatever it is. And that will also get reflected in the options markets, right? Because in the options market, you could get short, right? You could buy a put, sell a call, or buy a put and sell a call, create a synthetic short. And when the stock loan department is telling us that there's a high fee, there's no stock available, or there's a very high fee, and that will get reflected in the options market, or there'll be an arbitrage opportunity, right? So I'm going to just show you what that means. I'm going to come out here. Let's come out to, let's say, February 26th expiration. So this is 22 days to go. So we call this hard to borrow. It's not, if it's easy to borrow, I could borrow it shorted, no problem. Hard to borrow, I can't find anybody to borrow from, or it costs a lot of money. And like we said, let's take a look at the options market and see what they're telling us. And if it's hard to borrow, if the options are reflecting a hard to borrow situation, what will happen is that the price of the calls relative to the puts will be cheaper. In other words, the calls will come in because we could short it, right? We could short by selling calls. So that's driving down the price of the calls relative to the puts, because buying puts, we could short the stock by buying puts. And you will see the relative cost of the calls versus the puts start to get skewed. So here, let's take a look at here. We see GME stock closed at 147.98, right? Now, any put, below that, right, would be out of the money. Any call below that will be in the money. So I'm going to take a look at the 145 call, right? So the 145 call theoretically should be worth more money than the 145 put, because the 145 call is already in the money, right? You could if you exercised it, right, for 145, sold it for 147.98, you would make money. If you exercise the put, you won't make money. So the 145 call should theoretically be worth more than the 145 put. So, but in this situation, like we said, this is a hard to borrow. So let's take a look at the skew. So here's the 145 call. If I bought the 145 call, it cost me $58.20. $58.20. To buy the put on the same strike, $70.40. So you see that skew. it's costing, what is that, like $12.20 more to buy the 145 put, and that puts out of the money. So that's what we're talking about when the option markets are starting to get skewed. This is already, out of put call parity because it's so hard to borrow. And that's shown that demand. So you could see it from there. You could also find it, besides we see it on the threshold list. If you come here to the synthetic long stock, and I'm just gonna filter this out. This is giving us that put call parity. So we see in GME stock closed at what was it, 144.02, something like that. So we see here on the synthetic side, on July 16th expiration, that synthetic, to buy that stock synthetically, you could do it for 125.15 instead of the 144. So you see the discounts getting long synthetically, 125.15 instead of buying the stock at 144.02. That's the demand to get short. That's how much the market is willing to sell that stock below the market price, so you could establish a short position. Hopefully that makes sense. I kind of went through it quickly.
Yeah, BMOS Beats, who joins us almost every morning now on the chat, was asking, when does this update? Is it daily, every other day? When
Which one? The threshold list?
Yeah, the threshold list.
So the threshold list will know every day in the morning, right? Because after the day's trading, we look at they look at the settled trades, and then they recalculate it if they could locate or not. So the threshold list, that's every day in the morning. And it's in contrast. Remember, we're looking at the short interest. That's like very delayed, right? So you're looking at sometimes a month-old data. This one will update every day. The options market, they're updating throughout the day, right? So those are the most, they're indicating to you that hard to borrow throughout the day.
Now it's really interesting because they're saying that, well, I say they, there's a lot of chatter out there, particularly Wall Street Beats, Twitter, whatever, mentioning AMC as the next squeeze, but AMC isn't even on our threshold list. So it'd be really interesting if it enters the threshold list, maybe that's an interesting.
It would have to, right. It would have to, and maybe people are getting ahead of it and just covering their shorts before that even, because like you see what's going on here. And like, here's the other pressure.
It's going to feel a lot better. It's not going to feel good covering at 20, because I just got a text from a couple of my buddies who have been following these stocks, and they just said AMC hit 25. It's going to be feel a lot better covering at 25 than 250.
Then because now they see what can happen, right? Like this is so. The other thing I'm just going to show really quick with Gamestop is I'm taking a look at this open interest, and this is just like letting us know how much interest is, or how many contracts are people taking, relative to history, are holding risk. And here we have open interest. This is the total open interest. It's in the 100th percentile rank right now. We have 1.5 million options right now open, right? Not closed, open. And you could see that just increased yesterday, 25%. In the last 5 days, up 125%. And look at, if you compare to the 52-week average, 482, that's 3 times the average open interest right now. Like, so a lot of open interest right now in GameStop, which when you think about it, it can accelerate the movements, because there are lots of strikes there that somebody, if they're short, would much more, there's much more open interest than before. So once it starts crossing those stocks, it accelerates it, because then it triggers hedging, right? So market makers or whoever is short these things, you have to start hedging or covering. And I'm going to take a look at just the 5-day trend, open interest, and let's just see let's just see in the last day. These are the calls. So this is where the open interest increased the most yesterday, January 29th, 100 strike call. Let's take a look at the highest open interest. So yeah, on that 200. So Jan 21, and there's no change in the yesterday. So the 200 strike call had the highest open interest. So you see it broke right through. The highest open interest, that it was $50 away, had the most. So you can imagine, like, once it's breaking through, it's triggering. Even in a pre-market, people are starting to cover, because if a market maker short, they hedge some of it, but you're not hedging 100% until it gets closer to it. It's triggering. Your models are forced to hedge it.
Yeah, they're usually hedging by the delta. The delta on that was super small, you know.
Yeah, exactly. The delta now is like 100 because it's $45 in the money. Here, let me show you. I'm going to come back to the options chain. So here's the delta of this was 30. So if you sold, you know, and look at the volume here, 107,000 contracts on the 200 line just yesterday, 100. So if you're selling it yesterday, you're hedging it, you know, for 10 options, you bought 300 shares of stock as a hedge because it's a 30 delta. But now you probably have to buy the rest of the 700 or whatever it will be, because it's just broke right through the strike. I mean, you had a lot of cushion. Look at that, $18. But it does trigger once those strikes are crossing, it's triggering models to start hedging through them. Anybody trading volatility in the Black-Scholes binomial model, that's triggering to rehedge to stay delta neutral. Now let me just take a look. Let me come. I just want to come back really quickly to that open interest and just see in the last 5 days. So we saw the highest open interest. I just want to see where the biggest. So in the last 5 days, the 60 strike had the biggest increase in open interest, but you could see here that that's been decreasing, right? So in the last 2 days, it's been closing out. Last 1 day, it's been closing out. And let's just take a look. Highest open interest in the puts, there's the 20 strike. So way out of the, at this point, it's way out of the money. So that's GME. Really quick, just wanted to point out some things going on there. Very, very unusual. You could see like this volatility up yesterday, 92%, 63%. I mean, I don't think it's sustainable forever, but we see what's going on.
Yeah, it's super hard to capitalize. You think it's going down.
Oh, yeah.
How are you gonna?
Yeah, who knows? Yeah, because there's no cap to how much it could go.
I mean, I looked at the 200 calls expiring a week out. So not this Friday, it was the following Friday, first Friday in February. They were like 25, 35 or something near the close yesterday.
Yeah, $34.
Yeah.
And
they look like a juicy. They look like a juicy sale with the stock at 140 or wherever it was at the time.
Look, most active call. I'm putting most active call is the highest strike on the board. Right, that's the most active call yesterday, February 5th. Most active put is the 20. So people are selling, figuring like this is so way out of the money, it's not going down. That's the most active put, but most active call, the highest one. Highest strike on the board. Let's go to January 29th. This is expiring today. Most active call, the highest strike on the board. That's where they're most interested in. So, like you said, they're coming. Let me go February 19th. Let's see what they're doing here. So here it's a little bit different. That's on the 115 strike. So the 200 call still active, still getting volume, $40, but just showing you on the very short term, they're coming after the highest strike on the board. Let's go. Are there any questions?
Well, we had a Robert Black, who's nice enough to join us occasionally on the chat is asking, is the time the stock on the threshold list significant in predicting short squeeze? And I don't know if there's any way to predict a short squeeze, but you know,
you can't predict the short squeeze because there always could be, you never know if they're covering that day or found the stock. But basically once you get on there, you have the clearing firm has to find the stock, has to locate it, or they're gonna be forced to buy back that stock, right? They can't, they can't just sell something short naked. They need to locate it. So sometimes they'll locate the stock. Maybe the place they located, that person sold their stock. So before giving it back, they have to find a different broker or different account that they could borrow it from. It doesn't necessarily mean, but what it does indicate is that it can be hard to borrow, right? It might not create a short squeeze, but what it's telling you is that it's already hard to borrow as is, right? So going in there and establishing new shorts would be probably very hard unless you found a broker who has a bunch of this stock and willing to sell and willing to lend it to you. Is that helpful?
Yeah, super helpful.
It's not a predictor of short squeeze, but it's an indicator that yes, it's already not hard to find that stock as is. So it's getting closer to that.
Very cool.
Okay. And look, I wouldn't even add that. That's not my cup of tea. I wouldn't trade on a prediction of a short squeeze. That's shown historically to fail anyway. If that's I think there's other fundamental reasons to make trading decisions than trying to predict a short squeeze. But here, this is a very unusual situation.
100% speculative.
Yeah, very speculative. Let's see. We spent a lot of time. Let's go take a look at what's coming up in the earnings. Well, because we've got like 4 minutes left. So this is stocks set to report earnings in the next 2 weeks. I'm going to filter by stocks that trade at least 5,000 contracts or more per day on average. And we got here, so we got a bunch today after the market close. We got LVS expected to report today after the market close. That's straddle is pricing in an implied move in either direction of 6%. That compares to a 4-quarter average move of 6.7%, 12-quarter average move of 4.1%. So we're a little bit below the 4-quarter average, 0.75%, almost 2% above the 12-quarter average. The high move on that stock is 12% in the last 12 quarters. Tesla, they're expected to report today after the market close. Straddle's implying a move of 8.3%. That compares to a 4-quarter average of 4.6% and a 12-quarter average move of 7.8%. So we're above the 4-quarter average move, 3.8% above that, 0.5% above the 12-quarter average. The high move in Tesla, 17.7% in the last 12 quarters. And again, like this, the implied move here, it's below what the straddle implied historically, 10.8% last 4 quarters, 9.1%. Sorry, in the last 4 quarters, 9.1% in the last 12 quarters. Apple expected to report today after market close. Straddle's implying a move of 6.6%. That compares to 4-quarter average move 4.9%, 12-quarter average move 4.8%. So we're a little bit over 1 3/4% above the 4-quarter average and 12-quarter average. High move in the last 12 quarters in Apple, 10.5%. LCRX today expecting to report today after market close. Straddle's implying a move 6.2%. That compares to a 4-quarter average move of 3.6%, 12-quarter average move 5.7%. High move on that in the last 12 quarters, 15.7%. Facebook also today. So like a lot of big cap stocks today reporting after market close. Facebook expecting to report today after market close. Straddle's implied move of 6.6% compared to a 4-quarter average move of 6.5%, 12-quarter average move of 6.8%. High move on Facebook, 19% in the last 12 quarters. So that's kind of in line with with the historical averages. I didn't get to IBM. We don't have time, but they had some interesting things to say. I think like, they have like 4 major segments. One of them was gaming. Maybe we'll take a look at it tomorrow. The other one
was that IBM or Microsoft?
Microsoft.
Yeah.
So Microsoft reported earnings. They have interesting cloud, gaming did really well. Also, LinkedIn did pretty well. I think those numbers looked really good.
It's really interesting because their cloud, they blew it out of the water with the cloud, right? But
yeah,
IBM's cloud was actually, seems like it took a little bit of a hiccup. So that is
exactly. And IBM, that's their best performing sector, IBM, but they're lower, kind of giving us like muted guidance, and it didn't look like they were growing as people were hoping or anticipating. Microsoft kind of killed it in that segment.
Yep, you're right. Well, great job today, D. They love the show. Love that threshold list. Thanks a lot, my friend.
All right. Thanks, everyone, for joining us. Stay safe. Have a good trading day. Hope to see you guys tomorrow.
Trade in peace, everybody.